Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, head of trading strategies at TD Ameritrade, to discuss Nasdaq-100 performance trends in the Nasdaq Volatility Index. We'll also preview INTU earnings. Shawn, it is great to see you as always. And of course, the sell-off continues. We're just not getting any prolonged rally or green days in there. It feels as if recession fears really kicked in this week. That really seems to be the narrative.
That, I think, was the big sea change for me, was the fact that there may have to be tightening that continues here by the Fed, but some of the things they're going to try and address, they're trying to address inflation, but the big drivers of that are not the result of Fed policy. They're the result of things that are going on between Russia and Ukraine, things that are happening in China. Now you have India potentially banning exports of certain commodities. Is that something we start seeing elsewhere? A lot of those things are just really out of the Fed's control, more or less. And so if they're tightening into a global slowdown where we really don't have an end in sight, I think you are going to start to see some of that show up here in terms of domestic demand. And I always like to say, keep in mind, when we got our last GDP report out, the consumer was still pretty strong in that report. It was more of a net import, net exports type of phenomena that drove us into that negative GDP number. And the question is, does some of this inflation get so sticky, and Walmart and Target, some of those stores saying they're going to start passing those costs through? Does that really start to impact the consumer, and how much does that spread? So it's watching these price levels we've been crashing through. And once you crash through some of those levels, those key levels for the NASDAQ, any of the major indices that I was keeping an eye on the way down, once you started crashing through those, I knew the price discovery process was going to be a little bit more difficult, just because we were going down into levels we hadn't been at for a while. So I think once we start to get a little bit of a stabilization from a lot of the data points that we've been keeping an eye on, particularly on the inflation and global growth front, I think that will lead to a little bit of a stabilization here out of markets. Right now, it's looking at deleveraging to get done, liquidations to be done, and just buyers or sellers to get exhausted. So maybe some buyers can at least start coming in and dipping their toe in the water.
Yeah, Shawn, that's kind of what we've been discussing on the show. We know that there's oversold conditions, but has that capitulation point really set in? And that really seems to be the key here. So if we take a look at VOLQ, are there any indicators there from VOLQ, any of the other volatility indicators that show we could potentially be at that capitulation point?
I think right now, if I'm looking at VOLQ, it's telling me that you should just expect some of the choppiness, and I guess it's actually a little bit more than choppiness we're seeing lately, but just some of this volatility to continue moving forward. I think if you wanted to get to a point where, okay, this is the capitulation day, this is a complete sweeping out of all the sellers, everyone's gotten out of their system, I think you're going to have to actually see VOLQ spike up to some levels of a little bit higher than where it's trading at now. I think as long as it's kind of in this range, it's telling you to expect 2% potentially on the upside or the downside moving forward. But I think VOLQ is a very accurate portrayal of the uncertainty and the expectations you should have for price swings on any given day moving forward. But as long as it remains where it's at now, I don't think there's any sense that we are in a complete flush out capitulation type of environment just yet.
Right. And Shawn, to your point before, we know the Fed's part of the narrative here, but there are things they cannot control. They cannot control geopolitics. They cannot control the Chinese supply chain. They cannot control, more outbreaks of COVID. And to your point, it's going to take time to see how any one of those can potentially play out. More near term, let's take a look into earnings. And we know what the trend has been with earnings. It is really hard to get rewarded in this environment.
It is, and you're seeing that show up in some of these post-earnings moves. But I think the one thing, if you're looking at a company like Intuit, they've had a lot of other companies that are in their same industry or adjacent to them come out and report. So you might have the benefit of a little bit of some of that uncertainty being taken out, so to speak, in the sense that it's something that's being affected. It's affecting every single tech company that's out there. So there will be a few things in Intuit to see how they are managing this difficult environment, how they're seeing demand for their products play out. I think they're probably getting dragged down with some of just the bigger macro stories affecting tech across the board. If you look at what the market is expecting, though, it's expecting about a $30 range up or down in either direction post earnings. That would put it for 330 to potentially be support on the downside, or 390 as resistance on the upside. That seems to be the top and bottom of this post earnings range that they're expected to trade in. So that is helpful in that if you see it break above or below that, that really means that's the expectations or the whisper number that was being priced in moving in this report was significantly off from where the actual fundamentals of the company landed, or from where we heard of them coming out of earnings. I think it's going to be a lot about the guide moving forward. That seems to be what investors are focused on. So if they can guide towards something's a little more stable or a little bit less uncertain or dismal or negative that we've heard from a lot of these other companies almost across the board that have been coming out lately, you could see a pretty solid rebound. But if they come out and they have to guide significantly lower, then that's the sort of thing that's going to break us out below that 330 range, and then we'll see where we test in the downside. But certainly, I think the guide will be what you want to focus on here for their earnings report.
All right, Shawn, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.